Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, September 7th, 4:44 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a correction. As you can see over here by the trend gauge, all five of the major indexes are trending below the key moving averages that we use to track all three time frames, that's being the short term 21-day exponential moving average, the medium term 50-day moving average, and the long term 200-day moving average. Leading stocks continue to hold up much better than the indexes would dictate. Actually improved the arrow from red to neutral today. Got some good action out of a lot of leading stocks. You can see over here for what just happened today. Strong bounce off of 3,900 support. I've been talking about the support area for a couple days now. We undercut it and reclaimed it yesterday. We took a long off of that action, but I got out of it way too early, way too much earlier this morning than I should have. Checked the action on the day as we ended up having a trend up day. That's really a day where if you just look at it on a short-term chart, just really looks like very little in the area of pullbacks, just buying all the way up. So G6 up. This is our 6 ETF growth composite, up 2.1% on the day. S&P opened down, finished, but the opening was basically the low of the day, and then trending higher, up 1.8% on the day. NASDAQ 100 up 2%, Dow up 1.4, mid caps up 2.3, Russell 2000 small caps up 2.2, Global Diversified 60/40 stock and bond index up 1.1%, in-house just barely positive on the day, up 0.01%. Didn't participate in this uptrend day, but then again, when you don't participate in the downtrend, you can get away with days where you don't participate in the uptrend off the lows. This is very typical of how things work as the market transitions, and I'm not saying it is transitioning, but as the market transitioned from a downtrend to a short-term uptrend and then eventually, hopefully, a bull trend, we lag at the beginning, we catch up in the middle, and outperform as it matures, but that's putting the cart ahead of the horse. We really don't know where we're going, nor do we predict. We take it one day at a time, and right now we're still below all three critical moving averages with a one-day bounce off of 3,900. As always, we'll see where it takes us. So seeing where it takes us, let me describe that a little bit for how we do things here at Revere Asset. Trend following is what we do. Let me bring up a chart of the S&P 500 and I'll explain. Here's the three time frames that we track. The green line, that's the short-term 21-day moving average. The red line, that's the 50-day moving average, the intermediate term line. And the long-term is the black line, the 200-day moving average. When the market is trending higher above all three of these, we want to be as long as we comfortably can be in leading stocks and leading sectors. When we start to roll over, go sideways a little bit, some of our stops will start to get hit. The market will take us out. If we really start to roll over and the slope of the moving averages, the short term and the medium term, start to roll over, we'll get even more defensive. And then if we break below this black line, this is when risk in the market is at its peak. You can see we had a couple of battles back and forth in January and in the beginning of April. Back and forth above and beneath the 200-day moving average, and then 421, April 21st, this is when things started to come apart. And when you have your defenses up because you know you're under the 200-day moving average, it's easy to get out of the way of these big legs down, and that's pretty much what we've done this year. We're down 6%, the market down after today about 16.3, 16.4% on the day, or on the year. And then what we look for is a chance to re-enter. And we did this recently back in mid-July when we got through the short-term 21-day moving average, then through the medium-term 50-day moving average. The slopes of those lines curled up, so we participated in this move up. We ran into the big black line here, that was a huge resistance area. We failed. We've been going down since then. We've been lightening up, and then actually today we're all in cash. This 3,900 area is serving as a good support area, but overhead, last week we ran into this 50-day moving average, and we're less than 1% away from it again, actually just at 1% away from this 50-day moving average. So we'll see if we approach it later this week, how we react. And if you're interested in an approach like this, it's trend following. It's pretty much what you do with every other aspect of your life. When things are going great, you let them play out. When things are not going so well, you take corrective action. And the way we look at it, why should your finances or your markets, your investment in the market be any different? If you follow a couple of rules, you can save yourself a lot of mental and physical capital. And if you're interested in this approach, email me, don@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. You call that number, you'll speak with Revere President Danny Stewart, and he will answer any financial question that you have. So let's get into it a little bit further. Here is the S&P 500. As I said, bounced at that 3,900 area. Let's go to a 5-minute chart. You can see the trend up day. Not a lot of these have taken place recently. But it's bullish action to be sure, especially when it's accompanied by leading stocks, and it was today. But right out of the gate, we got up, we ran into this 39.30 area and then started to pull back. And when we broke this 39.20 area on the pullback, that was where we entered yesterday, and that's when I got out of the SSO for a very tiny gain, but market said, hey, Don, watch this. And it blasted off, consolidated higher, pulled back a little bit, and then just trended higher after 12:30 today into the close. Really nice day. As I said, we didn't participate in it, but then again, we didn't participate in the downtrend either. So still with strong gains versus the indexes year to date. So you can see here, when we take a daily perspective of it, this 4,000 and 40.20 area, which is where the 50-day moving average is the next resistance area higher. Leading stocks, as I said, outperforming the indexes. Is that a sign that we're going to break through here and maybe try to start another up leg like we did from mid-July? Seasonality is certainly against us. That would say no, but seasonality is a secondary indicator. We go with price and volume on the indexes and on the individual stocks. So there's the S&P 500. Let's go to the NASDAQ 100. Same situation. This around 290-ish is the support area here, up 2% on the day, right into the declining ADMA. That's the faint purple line, and then overhead we've got the 50 and the declining 21. We are 2.2% away from the 50-day moving average on the NASDAQ 100. Let's go to the Dow Jones Industrial Average. Not quite even to the 8 EMA, lagging a little bit today. Similar to the S&P 500, but a little worse. You'd see over the last couple of days, relative strength has trended lower on the Dow. Let's go to mid caps MDY. Right into the 50-day moving average, closed right on it today. Also the ADMA, as they are overlapping right now. Relative strength there has been over the last 3 to 4 weeks on mid caps before harsh pullback late last week. And let's see what happens if we can get above that 50-day moving average on the small caps. That's a good sign that it's outperforming. Same thing or with mid caps. Here's the small caps. Looks a lot like the S&P 500 coming into the 50-day moving average. So those are the indexes. How did the 21 over 21 fare, and what can this tell us about leadership? I kind of hinted about how they behaved, but let's take a look at the whole 21 over 21. We'll go through it very quickly. This is in order of price percent gain today. So the strongest stock on the day at the highest. The worst will be shown last. Lithium, perfect bounce off the 21 day, nice move up today. Pay attention to a couple of things here. First of all, the relative strength line, and basically all cases, you'll see it going higher, except for when we get toward the end, the last couple stocks in here. And also pay attention to the volume and the price action today. So if you were above average volume like you were with LTHM, so a nice move with volume and recent relative strength is best case scenario, and that's actually why these stocks are on the 21 over 21 for the most part. Let's continue on. First Solar, riding the ADMA higher, above average volume, great gains, fantastic relative strength. I'm going to show a stock at the end that's not on this list, but I believe is the canary in the coal mine for whether or not we continue to go higher. And then I'm going to show a stock that is telling just the exact opposite. Let's hope I remember at the end of this video to do that. CSIQ, another solar stock, good volume, good price action, breaking above this little resistance area. Excellent action here. BJ's now closing higher than that gap up day. Look at the relative strength there. We got shaken out of this. We actually bought the gap up, got shaken out when it broke below the low of the gap up day. That's one of my gap rules, but this has certainly recovered and is showing some serious relative strength lately. Shockwave, we got stopped out of our last piece of this yesterday, but it reclaimed the 21 today, although volume today was lower than 4 of the last 5 days. Sarepta Therapeutics, good acting biotech, nice day today, not quite the volume. Ulta, this continues to act well since its earnings report. Fantastic relative strength line, fantastic volume also. Chipotle, nice move, undercut and reclaimed its 21 last week. Nice move today with average volume. PDD, Pinduoduo, nice recovery after yesterday's sell-off. It's a Chinese stock. Not likely to buy it, I'll say that. CCJ, if you're not likely to buy it, why is it on there? Because when things are acting well, I want them on this leaders list. Whether or not I buy them is a different story, but it does tell me what's going on in all facets of the market, and I don't really want to have don't want to try to have preconceived notions about what should or shouldn't happen. CCJ, big gap up yesterday, ugly reversal, nice action today off the ADMA. Wolf, we own this, got stopped out of it, broke or bounced off the 21 yesterday. Nice up movement today. Palo Alto had a nice gap up, but sold off since then, undercut all moving averages, but reclaimed them today. McKesson, acting so-so. Relative strength not that great over the last week, but again, it's a defensive stock, and defensive stocks held up better relative to growth stocks last week. That's why it's on the list. Power, PWR, undercut and reclaimed the 21. AXSM, another biotech, holding up great since its big move up on drug trial news, just going sideways after that big move up. CEG, this is a alternative energy stock, tried to break out today but reversed, but still acting great. CF closed below the 21 today. In fact, its second close below the 21. And now we're starting to get to the weaker action stocks, and these were all negative, and this should tell us something. ExxonMobil, undercut, closed below the 21. We got stopped out of that a couple days ago. LNG, we got stopped out of this today, below the 21. Occidental, another oil stock, bounced off the 50-day today. BTU, a coal stock, below the 21. That's it. So these last 5 are all energy stocks. They all broke their 21. So that's telling us that there's somewhat of a shift going on away from energy and toward other areas of the market. I always say all rotation takes place within the S&P 500. You had 10 out of 11 sectors up today, and we're going to show that as we go through the tail of the tape right here. So starting at the top, put call weakened or lowered down to 0.99. The VIX down 8% today to 2464. This 2425 area is pretty critical. Below it is bullish, above it is bearish. Fear and greed dropped to 40. We're still under the bear case since the Powell speech on 8/26 killed the rally. Some news today. Fed hawk Mester, Fed funds should be above 4% by early 23 and don't expect any cuts for next year. There were several Fed speakers all said the same thing today. The market didn't care. Some notes, FOMC now at an 80% it's in 2 weeks. It's on 921. There's now an 80% chance of a 70. The market is pricing in an 80% chance of a 75 basis point hike. Expectations coming in today were negative as we're below all the key moving averages, but we did get the strong bounce off of 3,900 support. As I said, as far as support and resistance for the S&P and the NASDAQ, strong move off resistance and a reclaim or off of support for the S&P, reclaim of this resistance area that failed yesterday. And then now was a support, was failed, turned to resistance, but it reclaimed it today. The action, as I said, we opened down, but that was the low of the day, and then we had a trend up day. Bonds strong today, which means interest rates went down. That's good for the market. 10 of 11 sectors up. What wasn't up? Oils, XLE, the one of the 11 spider charts, not up. TAN, solar, we showed several solar stocks. They were up today. Biotech, tomorrow I'm going to talk about 5 biotech stocks that are acting very well. GLD and GLDX rebounded today off the weakness in the dollar. Let's take a look at the dollar chart very quickly. UUP, negative reversal after breaking out of this area. We want to see if it falls back inside of its base. If it does, that'll be good for stocks. So the canary in the coal mine, Enphase, it closed below the 21 last week. 2 other solar stocks replaced it on the 21 over 21. They all acted well today, but this one acted the best. 113% volume, up 8% on the day. Great day for Enphase. Broke above this 308.88 pivot area. This is actually a 4 weeks tight if you look at a weekly chart. Let's bring that up. Look at all that. It's really 5 weeks, 6 weeks tight. Look how tight that action is. Underperformed a little bit during that area, but all it did was catching its breath. A couple of moves below, but only one closed below the 21. It just happened to be last Friday, which was why it came off the list on Friday, but it reclaimed it today and busted out on strong volume today. This is the canary in the coal mine that I'm talking about. Let's see how this acts relative to the indexes. This is very clearly a leader, relative strength at a 99. And the action today just stood out. It also stood out yesterday for how strong it was on above average volume. On the other hand, Apple, they had their introduction of their new products today, lagged all day long. It is under all moving averages. Apple has got to get back above these moving averages if this market is going to have any legs. Note the relative weakness over the last 2.5 weeks in Apple since it hit its peak on 817, which also corresponded with the highs in the market. But Apple's, it's just so big in all the indexes, the Dow, the NASDAQ, the S&P. You can't have that big a leading stock below all its key moving averages and expect the market to make any progress. So keep a close eye on this one. Also keep a close eye on Tesla, which acted good today. Still no volume in Tesla. There hasn't been volume for 3 weeks, but it undercut and reclaimed the 50-day moving average today and moved right into the 21-day moving average. If Tesla and the market can right itself and Tesla gets back above this 200-day moving average, which is at 296.22, we might have a rally that can be sustained. So that's going to wrap it. As always, love to hear feedback from you. Email don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. So to summarize, let's go back to the tail of the tape. Summarize: strong bounce off 3,900 support. Leaders participate. We're flat in-house today as we got stopped on LNG. Took a very small profit on our SSO position. Watching to see what happens as the market comes into, let me bring up these support and resistance areas. 39.74 was the Fed pivot from 727 that kicked off the rally. We failed shortly after that. And we rallied for several weeks and then failed mid to late August. But big resistance area here, 39.74, and then 4,000. This is where we failed last week at that 50-day moving average, which is 40.20. It's now flattened out. Let's see, we're less than 1% away from there. Let's see on the S&P. Let's see if we get up to there. And what happens on the downside, 3,900. Is the area that we absolutely need to see hold. So wrapping up, Wednesday, September 7th, this is Don Vandenbord reminding you it's not how much you make, it's how much you keep. Thanks for listening and have a great day.